While BRICs have been dominating the headlines lately, investment returns have not been too impressive over the last year or so. In fact, according to Resco Asset Management, there might be a sectoral switch out of BRICs into developed markets. In South Africa's case, this could be prompted by an unsustainable current account deficit. Rob Spanjaard joins us in studio to explain his view of the current landscape. Rob, great to have you here.
Yeah, hi Warren.
Just on the BRICs, obviously a big headline in South Africa last week with the likes of all the leaders coming out and having a conference and talk of now a BRICs development institution of some sort. But tell us about the investment returns.
You know, I think obviously the BRICs as an investment destination are going to be great, but stock market returns have not been good. You know, if you look South Africa, now if you look at it as international investors in dollars, South Africa over the last 12 months has been flat. India and China have been flat. Your return is pretty close to zero. Russia's down 10%. Brazil's down about 20%. Whereas if you had to just stayed at home, stayed in dollars, the US market's up 10%. So as investors start, BRIC investments were fantastic news, but now you're getting a period of underperformance where it isn't those automatic returns. At the same time, you're looking at economic strains in Brazil, you know, South Africa, weak currency. So there's one-way street on the BRIC investment, and you're reading a lot of investors who're starting to question that BRICs are just a one-way bet. So
and obviously when things become a one-way bet, that's a warning sign for many investors.
Well, exactly. Then guys, the sheep will turn around and run the other direction. So a foreign investor can take no risk and get probably a higher return in dollars at the moment. You know what, some are going to start doing that.
Is it a question at this point of just the valuations have run too high? Because obviously there's some fantastic demographic trends behind the BRICs. You know, we talk about the population growth, and in China and India, there's the skilling of the population, and I guess the withdrawal of some of the institutional constraints that prevented the Indian economy from growing prior to, say, 1990. Is it still a case that the earnings growth is there and it's just the valuations are too high at this point?
You know, the valuations are one thing. We are very bullish on the BRICs as an idea. The economies will do well. So Africa, you got good economic growth rates. The problem is, how do you turn that into stock market returns? So you've got difficulties in China. A lot of BRIC economies there's South Africa and Brazil particularly are resource-based. Brazil is trying to work their way out of a recession and a constrained consumer environment. So sometimes it's not as easy to turn it into stock market returns. That's been the experience of China. China, you've had a great economy, it's been booming, but you haven't made a lot of money as a stock market investor investing from outside, not in the last couple of years.
Okay, so China's a very interesting point, and I think one other point that we wanted to touch on here, and I think it's going to be quite a big trend. You alluded to in your notes to me before the interview that, you know, the Chinese cities have a massive problem with environmental pollution. Part of the growth that the Chinese economy has experienced has been from exports because they've been such a cheap base from which to manufacture. With things like the environmental control coming in, you know, are we seeing a broader move now that China is going to experience significant inflation going forward, which would detract from its position as being the world's workshop at this point?
Yeah, well, Warren, I think definitely. Yeah. You're seeing it already. You're seeing it in the wage, just in their straight wage increases. So it isn't, you know, if you compare it, say, to Mexico in a lot of cases cheaper, where there's big electronic industries. Obviously China still has an advantage because they have the component manufacturers. It's not like, don't believe China that it's negative for China. It's just China being the hands down winner in every game they play isn't going to be like that, because they have got economic growth has its own difficulties, as with pollution. You know, it's just there are problems there that it's still going to be positive for China, but it becomes more complex as you get bigger, and other countries can compete.
You alluded to obviously specifically as this AutoCat, which is a key component in the autocatalytic converter, which prevents pollution. The CO2 emissions is obviously platinum, and you're suggesting that this might be the trigger for a reversal in the fortunes of the platinum industry, which have just had so much bad news over the last 4 to 5 years. Is this, just take us through that thesis of yours?
Yeah, you know, so what we're saying is, the difficulty prior to 5 years ago, the Chinese could run the economy on the basis greens is is something we eat. We're not interested in the environment. We can do whatever we feel like, and people like the Germans can be concerned about the environment. They're getting forced to consider the environment. because you can't send your kids outside to go and play. The public are complaining, you know, we got this air that we can't breathe. So they're being forced to take it very seriously. Now in China, average vehicle has 2.5 grams of platinum in the AutoCAT. In Europe, that's about 4.5. And China has
and is the difference because of the environmental legislation?
They've just set the legislation lower.
Right.
You know, a smaller car will take less, but most of it is they've just set the standard. Now, from this year, China have lifted their standards, and they've got a succession of standards that will increase to much closer. So they'll go from 2.5. I don't think they'll get up to 4.5, but they're going to get pretty close to 4. So you're going to have a very significant increase in grams of platinum per AutoCAT. So that's very significant for the platinum industry. And it's a very interesting thing because as we've seen on our mining side, our industry's actually cut back on production, and there's now almost zero going into new mine production. So our industry stopped expanding. They've stopped expanding. They've closed down the expansion plans, and it's guys just work with what we got. So you don't have a new mine response. At the same time, China's selling more vehicles, and they're going to need more platinum for each vehicle. Now, there's a lot of dynamics in the industry because there's recycling, but if you look it's a kind of almost, we say, is the opposite position that the iron ore industry is in. There's a whole lot of projects that have come on board in the iron ore industry that are going to start producing over the next year.
Whereas this is not the case.
This is almost the opposite. The industry stopped expanding, but there's a demand increase and there's no supply response. And we know with these mining projects that take 3, 4, 5 years to do, you don't switch them on. They're very complex and they take many years to get going. So there's going to be the supply of platinum available. On top of that, which is also very significant in palladium. Now you can swap out platinum and palladium, but in palladium there's been stock that's been coming back on the market from the Russian government and other sources. That stock is now dried up. So palladium will actually go into deficit. And platinum's already pretty close to a deficit. With South Africa cut back probably roughly about 600,000 ounces per year of production. That's kind of really happened at the end of last year. So in platinum we're in a deficit. Palladium we're also in a deficit, even at the moment.
So how do you play this now? Have you been investing in the platinum companies at this point, or do you still prefer the physical ETF or ETN?
The EDF is going to be the first response because we need to see the EDF, some response in the actual platinum price. Yeah. But this is a long-term theme. It isn't something that's going to pop next month, but you're saying, well, on the one hand, demand is going up quite significantly. On the other hand, the industry has just closed down any idea of increasing supply. Now, somewhere that becomes a great place to make a lot of money out of platinum and platinum shares.
I just wanted to talk a little bit about another precious metal, and that's gold. It seems to be sort of wavering. We saw it go up to, I think, close to $2,000 towards the end of 2011. And then last year fluctuated between, I think, $1,500 and $1,700. When does an investor hold gold? And is the time now past? Do you think investors have got tired of waiting for the speculative rise in the price?
You get a lot of theories that guys saying hold gold in inflation or hold gold when there's deflation or banking crises. Essentially, our reading of it and is really just people buy gold when it's going up because there's a good return, and the more it goes up, the more people want to hold it. And that's what worries us about gold. It starts going down a lot, and it's a lot of small investors who got into gold as well. So it's a lot of ETFs, gold, physical gold sitting in vaults. And we worry that gold comes back on the market. So that hasn't been used. That's just sitting in a vault, essentially almost speculative, and that starts to come back at us.
Interesting that you cite that the central bank's holding a lot of gold, because it's obviously some of the gold bulls attributing one of the positive reasons for holding gold is that central banks are buying it. But I'm still a little unclear as to when does gold really outperform? Is it during periods of inflation or deflation? Because it seems that the money creation that's taken place over the better part of the last 5 years has certainly helped it. But we also saw in the early part of the last decade, gold had a great run. So do you have a particular fancy for the period that investors should hold gold in?
We don't think either really apply consistently enough to make money out of. There are, so we have a bank crisis, gold's going to pop $20, $30, but it's not sustainable. I think it got to the $2,000, and that's going to be the peak for quite a while. But the problem on gold is that when it starts going down, it carries on going down. And that is, because the current environment, the Fed's printed close to $3 trillion. Hey, if that's not a good And that's just printing money out of thin air. And that's apart from what the European Central Bank has done. If that's not a good environment for gold, then what is? Now, does that turn out to be hugely inflationary? Then, yeah, probably would be good to be in gold. But the problem in inflation is that interest rates then go up, and then it becomes even more costly to hold gold. So it's hard to really see an environment other than if gold's going up. And I mean, it doesn't sound like a good investment. It sounds like a bit of an economist's answer, but that's to us it's a trend-following theme to us.
Just to leave gold aside, obviously just wanted to get your perspective on something very topical at the moment. That's the Adcock Bidvest deal. Two sides that seem to have walked away. Adcock's telling Bidvest that their offer didn't come as a legally binding, firm intention to buy the company. But you've got you fancy Brian Joffe in this contest.
Yeah, Brian Joffe and the Bidvest guys are probably the savviest takeover guys out there. I mean, I don't for a moment believe they went off half cock. You know, they know what they're doing. They've taken over many. In fact, Bidvest is built. It isn't built because they've run some companies really, really well, but they've taken over a huge amount of companies in their time. They know what they're doing. Yeah, exactly. They're not. So, I mean, I just think it's an intriguing investment idea, and it's probably a good reason to buy Adcock, because wait for the next page, the next chapter of the story, because I don't think we've heard the last of it. I don't think someone woke up with a whim at Bidvest and say, let's put in a half-baked offer for Adcock and see what happens. I think it's an interesting investment story, which I think we'll enjoy reading about in the next couple of months.
So first round to Joffe or to Adcock at this point? Or you call it a draw?
If I didn't know, if knowing Joffe and them, I think undoubtedly first round to Joffe. They've done something for a reason. And it's an opening gambit. It's the opening line in the game.